Good morning, everybody. Hope we are doing well. Hope we're ready for a fun day. I think we can get rid of one of these at least. All right, it is Friday, October 7th. As we try to say every Friday, let's have fun. Let's size down. Let's not ruin our week, but let's hit some great trades together. Yesterday, like we talked about, could be a consolidation day. That's exactly what we got. Ran up, tapped the 21 almost, and then ran down and hit the 15, and then just kind of hung out. Slid a little bit end of day back to the 15, but we had all these squeezes in place. And we had that key 3741, which provided support overnight, pretty much. We have our pre-market low, overnight pre-market low at that 3732. Oh, man. So today becomes pretty simple. But before we dig in, let's quickly just review the economic calendar. Today we have non-farm payroll coming out at 8:30. So pretty soon, before the end of prep. We have some unemployment jobs data coming out as well. And then we have Fed speakers all day. Yay. Next week, it looks like the Fed speakers chill out for a while because they have FOMC on Wednesday, as always. Whenever it's an FOMC, it's always Wednesday at 2. Looks like we don't have Uncle Pal talking after this one, so. And then on Thursday, we have CPI coming out. So these are two big economic events. They're going to move the markets. Higher or lower, we'll have to see. And we also, have our weekly initial jobless claims. Oh man, I have a question for the folks in prep. Monday, someone go look for me. Is the market going to be closed because of this Columbus Day crap? Let me know while I start to dig into prep. So, the key level I've talked about this week for support is 3741. We've held that. We slipped it just enough to get down to about this 3732. That's the low from Wednesday and the low overnight. So we have a zone of support here from, call it this 30 to 40, this 32 to 40, looking to hold that. We'll see when we get our non-farm payroll data if they use it as an excuse to dump out of that zone of support and start heading back down, or if they just keep us above that zone and start to push higher. For me, that zone of support, that 32 to 40, has to hold, otherwise bears are starting to take control. If you remember me talking earlier in the week, on Monday, we pushed through all of our intraday moving averages and got to the 4 hour, then pushed through that, turning all the moving averages into support, and that 4 hour sat down at 3708. Well, now it has caught up, and it was at that 3741 yesterday. Jeez, there we go. And, it's moved up a little bit to that 3744, but I'm still going to say that this zone of support needs to hold. And if it can, then bulls can still be in control. We do have a 4-hour squeeze coming in around us, providing support at that 20, 25. So at the very worst, we could slip the 4-hour, the 4-hour 45, acting like we're going to break down back below, moving out the 4-hour again, just enough to tag these squeezes and then reverse back up, kind of a look below and then back up on that 4-hour 45 EMA, which I try to cover a lot. I see a little question in chat. Rhino, why am I using the ES? Because we get more data, and because it's traded around the clock. For me, ES is the market. That's mama market. And you can. There are plenty of reasons, and I've heard plenty of arguments why SPY is good enough. ES gives us more data. Overall, it's the futures, man. It's where it's going. Anyway, overall, looking for this to hold above this 4-hour squeeze and this zone of support. We'll see how non-farm payroll goes. If we can hold that, maybe we can start to push up through the daily, or back to the daily 21 and to the top of this 4-hour squeeze and this week's highs, right? If we can get past that, the next zone, it's at 38.43, 38.655. If we start to lose this zone of support and slip into this 4-hour squeeze, we can get down to this 37.08. If we start to give out 37.08, heading back to 36.68. In Q. Oh, don't take forever to load. While we're waiting on that to load, you know, you could ask, why don't I just track SPX and chart that, right? Because we don't have any overnight data. And there are plenty of folks that say, oh, just turn off overnight data. You don't need that. Well, I'd say you're missing a big piece of the picture here. Oh, don't do it, Toss. Come on. All right, I'm going to close some things to see if this would help. There we go. I think that helped. So in Q, kind of the same story. We are in, stack squeezes all around. We've got 4-hour squeezes. 4-hour squeeze just below at about that 11,400. I'd like to see this 11,500 psych level and the daily 8 MA, that blue line that is now kind of flatlined right on that 491, 500. Like to see that be support and start to send us higher back to this 11,677 and the daily 21. Still have not completely tapped the daily 21, which is this white line up here. If we start to lose that 500, then we're likely coming down to test 400 and the bottom of this 4-hour squeeze back near Wednesday's lows. We've been holding up above those, so a little bit of relative strength over ES, over the S&P, which, did get down and retest Wednesday's lows overnight. NQ did not, so a little relative strength here. Let's see if tech wants to lead us up on a Friday. We know how they love to run tech up on a Friday in bullish sentiment. I'd say if we start to get down below that 11,400 and push into this 4-hour squeeze, then we are losing bullish sentiment and bears are starting to take control. They're going to try to take us right back down to 11,200, the last spot that we consolidated on the Monday pop before taking off higher. And that would also fill the gap from where we kind of started on Tuesday. We reached into that gap just enough to run into Monday's highs, right? But we never completely filled it. So let's see if we want to get down and retest Monday's highs and completely fill that gap. If we can find support, get moving back to the upside. If not, if we reach back up and reject, we are coming back down. But if we can hold, one to get back and touch that daily 21. Maybe even reach that 11,800. Thank you, Mr. Hexcellent, for getting that answer. So Monday market will be open. Very good. Just no econ data, which is fine by me. Ruddy, kind of the strongest, I'd say, a little bit out of the indices. It did get above the daily 21, came back and tagged the daily 8 and 15, above the 21 again, and then now just wedging. You could draw trend lines for your wedge. I'm at least going to draw from the bottom. There we go. If you right click on any trend line like that, you can go to create alert with the drawing. And I like to just put it on crosses, so if we do get down to test it, it grabs my attention if I'm looking elsewhere. On the ruddy, basically looking for it to get above the 21, push through the highs of this week, and keep trucking, getting through that 1782 and up to 1800. But if we start to head back and lose this trend line, coming back to test these moving averages, this week's lows, if those can hold, right back up. If we start to lose them and reject 1713, then we're coming back down to 1700. YM. YM's been holding up pretty decent as well. I'd say at least it made it to the daily 21 and lived above it for a little while. It came back yesterday to hit the daily 15 and daily 8. Just like I talked about in prep yesterday, it could be a consolidation day to bounce around these moving averages and retest them. We've got that retest. We set a new low of week at around that 29,830. There you go. But we're on a nice little trajectory. See how that economic data goes in a few minutes. But would like to see us hold above the daily 15 and daily 8. If we start to slip that, coming down to test these squeeze bottoms, this 4 hour. But really looking for this stuff to hold overall around 29,800. If we do have to take a dip. If we can hold there, then looking to get back up over 30,000, big key psych level that we're getting above right now. And then a goal to get back to this 30,350 where the daily 21 sits, and 30,500, this week's highs pretty much. Apple. Doing a good job holding above 144. We've run from 138 in this zone we had below, pushed up, and then gapped above 144. We've slipped it a little and retested the highs for Monday on Wednesday. So still looking for that to hold. You can call it 143 to 144. Looking for that to be support and start to send us up to 147.5, the high of this week, and then up through to the next key levels with the daily 15 and daily 21 sitting up above. Daily 21 pretty much right at 150. So the market reverted to the mean. Looking to see Apple hold this support and make its run to the mean today. We have enough in the tank to get there, even with, we're opening flat, right? So we need Apple to wake up and shake its little booty on up and finish a reversion to the mean, just like the market. That would be a great upside that would push all indices back over the 21, right? If we start to give out that 144, 143, then we are likely coming back to test this 141 and a half, 140. And if that were to give out, then it's back to this zone. AMD. And on any of these names, we need to be ready for, with all these stack squeezes, another consolidation day. What I'd love to see is holding squeeze bottoms and then running all day up to squeeze tops and closing around there. It would set us up for a potential Monday little dip and then Tuesday, Wednesday rip into FOMC. AMD, they released that they are, I posted it in the chat, like 1 billion in revenue, slashes 1 billion from quarterly revenue forecast. This is the same thing that NVIDIA did before their earnings last time they reported. And AMD just did the same thing with about a month left. So if you're wondering how AMD is going to go back and look at NVIDIA a few weeks before it went into earnings. They announced something similar, like a 1 billion revenue slash, and it dumped, and it just, it was ugly. It's been ugly. So, not loving this. I would leave this alone. But look where it stopped and where it's settling, right at the bottom of that 4-hour squeeze. That's why we track these things. So it could be finding support. It could have a little bit of a snap back, but we have lows to deal with. We've got some of these levels around 66. 66 was big. It was resistance on Friday. We got to it and collected at it. So we're trying to get back to 66 at least. Well, this low at least. If we can get through that, then 266 would be nice. I don't know. I don't really see a snapback. I'm going to be leaving that one alone and moving on. Amazon holding up well. I'm going to do a kind of a different trend line here than maybe you guys are used to, from the high of Monday and the low of Wednesday. We have our daily 15 and our daily 8 right down near that trend line in these squeeze bottoms. So overall, looking for this to hold right around 118 and a half, 118. Try and send us higher. I know we're knocking on the door of 120. I'm not saying we have to have a dip, but we are going to have this economic data. Let's see if, a lot of times I say the reaction, sometimes it's already figured out and priced in, and they just use it as an excuse to bring it right back before taking it higher, or to pop it up before bringing it down. Just we'll see what we get in a few minutes. But overall, if we have a dip, looking for that 118, 118 and a half to hold, send us back to the daily 21 at 121, to this week's high at 123, and if we can push any further, the goal is 125, where that first Keltner sits. BA. Holding up very well, tight squeezes and a wedge, right? So, we're in a flag. Call it what you want. There's plenty of people that'll say, oh, you mean that bear flag, even though we've gone up, the leg of the pennant is below us, so that's technically a bull flag, but either way. Held between the daily 8 and 15 yesterday pretty well. Looking for that daily 8 and yesterday's lows around that psych level 130 to hold if we have a dip. Looking to get through this week's highs, trying to press up to 138 where the daily 21 sits. Cat. And I know, most folks might not even trade BA and Cat, but I like to keep an eye on them because they do hold weight, especially at 4YM. If BA it starts tanking, it's hard for the market to just keep ripping if BA is tanking. So, Cat holding up decent, made a nice push yesterday, made a nice push and stayed up instead of most things that kind of stayed down. So a little bit of relative strength in Cat. Let's see if it can stay above this nice little 177 floor that it's made for itself. And try to keep pushing through this week's highs to get back to this daily 50 up above at 184. If we start to lose that little floor, we're just coming back to these moving averages and to kind of fill this gap, right? Back to maybe 171 if we start to slip. Coin. If you notice this little column in my watch list, this is a Keltner position. If you know anything about Keltners or don't know anything about Keltners, the daily 21 is kind of the middle of the Keltner range, and then you have basically an ATR down and an ATR up, and then 2 and 3, right? So a lot of names have made it back very close to 0, back to their 21. That's what, just thought I'd explain that little column, just to let you know as I look around, I can see coin is above its daily 21. It's actually getting close to the first Keltner up. Already tapped it this week. So let's see if we can hold this trend line. Overall, would love to hold yesterday's low in this squeeze bottom if we do have a dip, and start to work our way back up to this week's high around 76. If we can push further, overall goal, not saying we get there today, maybe more like next week. If we keep pushing higher, it would be getting it up to this 81, the next Keltner on coin. But we do have stack squeezes on a lot of things today. We should expect maybe some quick good moves to hit squeezes, some settling, and then later in the day, a push outside of the range, potentially. If we start to lose that one, that 71, then we're coming back to the daily 21 here at about 69.5, and then maybe the 15 at 67.5-ish. Google was nice and strong yesterday. Got up to its 21 again, and then came back. Overnight low, right near yesterday's low, and we're right back above 101. Let's see if we can get through that 102, that daily 21, this week's high, with the goal of getting up to 105, where the next Keltner sits. And looking for 100 to be support, with the daily 8 and 15 there. If we start to slip it, 99 would be first for that first Keltner sits and Friday's highs. And if the whole market just starts slipping, then it's back to like 98. And that next Keltner down is 96, GS. They don't report next week, but some banks do start to report next week. Finance was a little weaker yesterday, so we're looking for that to hold up above this 302. Start working its way back up to this week's highs and that daily 21 around 312, 315. But if we start to lose that 302, coming back to psych level 300 where we consolidated Monday, should that start to slip, that 298, we could get back to 295, 293. JPM does report next week, next Friday. So, finance is about to report earnings. For JPN, let's just see if it can hold that 108, start to work its way back up to 110, 111, where the daily 21 sits. Start to lose 108. We're talking about getting back into engulfing some of Monday, back to 106.5, and then 105. Meta. Meta decently strong yesterday. Got up, tried to stay up, slipped back with the market, having a little gap up. So, market kind of flat, small gap up. Meta, nice little gap up. So, could be a little relative strength over in XLC today. They have been a little bit of a lagger. If you look at Wednesday, got down below Monday, whereas everything else we looked at took off Monday and hasn't gone back. But holding up well, let's see if we can hold overnight low if we have a dip. Got a few minutes till that data comes out. If we're going up today, looking for Meta to get through psych level 140 through this high of the week, 142.5, in a bid to get to 145 where the daily 21 sits. Start to give out 138. We're going to come down into these squeezes back to 135, the low from Wednesday. Microsoft. Basically been ping-ponging around from 250 to 44. Right, so looking for 244 to hold. We have the daily 8 right there at the bottom of this 4-hour squeeze, 2-hour squeeze, sorry. So looking for that 244 to hold. If we have a dip, send us back to 250, and if we can push through to 253 where that next Keltner sits. If we start to lose the daily 8, coming back to this 240, the daily 15, and that first Keltner right near Monday's highs. Netflix. Netflix reports in 2 weeks. Something to keep an eye on. Could start a little pre-earnings push. That's why I know, like, if you look all around Twitter and everywhere, everyone's saying this whole rally is crap and we're going right back down. There is a little thesis that we have some tech earnings coming. Those earnings could be bad and send us back down. We might rally into those earnings so that we get a little higher before we go a little lower. Just something to keep in mind. Netflix, looking for it to try to hold psych level 240 overnight low and push on up to this week's high and finally make it to 250. The 240s hit their beast. I covered this yesterday in the room. You should definitely join us today in the room. If you did not yesterday, we're going to have another free day. But I pulled up the chart and showed everybody how to review that 240 on Netflix on Wednesday with this dip and then right back up. If you look at the 240 call with our beast system, all it did was get price action directly to our weekly buy zone, and then it took right off and kept going. So, pretty neat. Definitely check out those Netflix 240 calls. Economic data dumping us down. 37. Ooh. Looks like we wicked almost down to 37.08. Damn it, get that candle. What is it? A low. 37.10 is what we slapped. Now we're coming right back up. So, a little warning scare. Let's see if we can get right back up above that 37.30 and hold. Most everything that I've described is still holding up, and thesis is still there. Even if we do start to break down, I've given targets for where we're going to go. Overall, looking for Netflix to hold this daily 50 232 at the bottom of this 4-hour squeeze. If we can hold there on a dip, because we are starting a little bit of, obviously, we are starting a downtrend, which will probably carry us into open. So looking for this to hold 232 and try to make its way right back up above 240. If we start to lose 232, and well, we're going to this week's low around 228, and should that give out back to 233, near last week's lows. NVIDIA. If I click on the right thing. Just like I said on AMD, chips not looking good. I'd leave it alone. You know, even if you were trying to short it, there's only a couple of bucks left to short it back to the lows. I'm going to leave it alone. Let's see if it can find its feet. Yeah, we're kind of back to Monday's last bounce point. Let's see if it can hold there and try to work its way back up. Otherwise, it's probably coming down to 120. QQQ. Just like everything else, just slipped to kind of Wednesday's low, Monday's high. Let's see if that zone of support, you can, you know, if you're not familiar, you can draw a little rectangle of support, just like this, and then send it over a few days. There you go. Zone of support down this 4-hour squeeze, looking for that to hold right around that psych level 275. We can hold that in this 4-hour squeeze during the cash session, looking to get back up to 280, where we just rejected from. If we can get through 280, up to 284, where that daily 21 is, and the top of this 4-hour squeeze. If we start to give out this zone of support, we're talking about engulfing Monday. First stop at 272. What was resistance that we got through? Let's see if that's support. If not, 270. But I do like opening, you know, on these names at a big fat 4-hour squeeze bottom with a zone of support. This could set up for a nice day to the upside, even though we just had that negative reaction. Skipping these names, let's go to SPX. Alright, now we're going to be gapping down about 20-some points. That'll put us near Wednesday's low. And this gap fill that we started to reach into and then gapped over. I try to mark on SPX any gaps left behind. So let's see if this 3720, 3700. Well, let's see if this 3720 provides support. We have a daily Keltner there as well. We could open near this gap top, reach in for just a second, and then get going. But if not, we could go back to fill this gap, which would mean, you know, ES slipping down to below 3700 as well. If we can hold, looking to get back up to the top of this gap at 3760, and then trying to work to yesterday and Wednesday's high and back to this 21 at 3800. SPY. Pretty simple. Looking for a 370 to hold. This was an old gap on SPY that we stayed below last week. We kind of opened in the middle and took off. We kind of got down and almost filled it. I'm still leaving the gap just to say between these two key levels, we still have, some unfinished business. It looks like we could be opening near the bottom. So let's see if we just give 370 a little tap real quick at the bottom of this 4-hour squeeze. Big psych level 370. See if that can hold, start to send us through 374. If so, then it's a goal to get up to this 381.5 at the top of this 4-hour squeeze. If we start to lose 370, we do still have our squeeze reaching down to 368. So we could lose 370, look weak, but hold 368 in the morning and then start a ramp later. If we start to give out 368, back to 365.5 and then 362. Tesla. Well, as we know, Tesla's had a lot over its head lately with this whole Twitter acquisition, blah, blah, blah. Well, pretty simple. Let's see if this week's low and 235 can hold Tesla. If not, coming down to 230 at the bottom of these squeezes at that third Keltner. But if we can hold 235 and this week's low, looking to get back up above 240, trying to push to 245 first, where the 2-hour squeeze sits, and then 255, where the 4-hour squeeze sits with the daily 8. UVXY. Yesterday it pushed later in the day, which caused that slip that we had. We got up to 12. And now it looks like we're going to open a little bit over 12. You can see I have a trend line from the highs of UVXY last week, and we're knocking on the door of that right now. We also have a tiny little 4-hour squeeze right at about 12.3. So for upside today, looking for UVXY to reject either 12.3, 12.5, and start working its way back down. Is this 2-day squeeze? Okay. Either way, would like for upside today to see UVXY reject the top of this 4-hour squeeze at 12.3. I'd allow it to get to 12.5, but it has to get back below 12.3 and head down below 12, kind of rejecting this trend line, and start making its way back to 11.5. And at a, if we are going to rip to the top of 4-hour squeezes on the market, we want to see UVXY get down to 11. We have the daily 50 down at about 10.5 as the next target. But if we take out that 1250, we can likely get up to 13, and last week's high around 13.5 if we start having a big drop again. On VIX. You can see we got down to these key levels, and now we're starting to push off of them. On VIX, I had a little bit of a tighter trend line that we kind of got through yesterday, came back to retest, and started to truck higher back to 30 and 30.5. Now we're trying to hold 30 in that daily 8. So for downside today, if we are just going to roll over, we'll likely see VIX stay above 30, 29.5, this daily 15, but ultimately holding 30, pushing through yesterday's highs back to 31, 31.5, where that first Keltner sits. If we can see some upside in the market, looking for VIX to get back below 30, this daily 8, and work its way back to this daily 21, maybe even through it down to 28. And just because we're starting to break out of this trend line, I already know that there's the potential to go up. I'm going to just make a slight adjustment over to this other high that I left out of the trend line. That's kind of the last sign that we are going to roll over, right? If we start to get through this trend line and hold it above 30.5, 31, 32, maybe even up to this 33.5. These are my key zones above, where usually the market should start to see a bottom and VIX come back down as we try to rally. That's kind of what we got. If we're going to roll over and give up this rally, we're probably going to see VIX work its way back up here, right? But to continue the rally, we need VIX to start getting back down below 28. Talking about continuing the rally into next week, right? Get below 28 and head back to 25, where the daily 50, daily 200 are sitting. So that's it in a nutshell. Hopefully this is helpful for everybody. We are extending our free day. It's every Thursday we have a free day. We're going to do it again today on Friday. So for anyone listening that hasn't subscribed, you can come back in today and test out the free tool. If you picked up the free tool yesterday, it should still work today on the strikes. So we'll see everybody in chat. Thanks for tuning in. Good luck today. Remember, it's Friday. Size down. We don't want to do any damage to ourselves or give up any gains we've already got this week. So, thanks. Good luck. We'll see you in the chat.